3 years later, and it's 100 G's more.
Yep.
I'm like, this is not even reality. This
and that's when you know there's a problem. That's when I started getting nervous anyway. I was nervous at the top, and I'm a good competitor, but I compete better in a down market than in an up market. Anybody could sell a house, get agents, too much going on. Now, in my business, there's a lot of people that aren't doing it, and they don't know where to go, and they're coming to us. But back from 07 and 08, oh my God, I was doing 500 loans a month, to doing Alt-A subprime to FHA, to people didn't even have tax returns, to the government coming in after everybody, just saying everyone did everything wrong but them. They're the ones who wanted us to give home ownership, right? And they still do. And then they blame everybody else. And then they're doing modifications that nobody knew back then what a modification was. There was no rules. The government didn't own Fannie, Freddie, Ginnie back then. So, HUD, they owned HUD, but they didn't own Fannie and Freddie. Now they own it, they take it. This time around, everything was pretty much controlled with the modifications, the forbearance. It's pretty good. They got their shit together, and they're keeping they're buying mortgages now. They lowered the rates. They manipulate the market. So now my son, who owns a mortgage bank, who does pretty well, is on fire. He's smoking. His volume has gone up by 35% because of the
right.
So non-QM lenders are still, a little tough for them. I talked to Sprout today, which I had them on my last webinar. They're trying to get their back together. They just brought a jumbo product on, so it's going to be fine. Just another month or two. It's going to be fine. Look, the 30-year product is not back yet. It's not. So you may have to go get a 30-year product from someone like my son at Hartford Funding, because he can, if you qualify, you have your tax returns, you could still get a rental loan, no problem. But you can't go to a private lender, for a little bit more of an interest rate, and they don't check everything, because that 30-year product was a securitized product, and that shut down. So hopefully that starts to come back.
Well, I'm glad you're on this live stream, Fred, because you bring not only the experience of going through 9/11 and 2007, but
I have the experience also from being in the mortgage business, being up high, flying high from 92, right? Watching the 92 bump and then the 98 bump we went over the recession. And then after 9/11, we didn't hit, we would for 3 months, and then everybody came back and pushed the envelope to 2007. We were supposed to have a recession, and 9/11 is something like this. It was like a 3 or 4 month, but then all of a sudden I'm driving around in 2001, and I'm driving in Long Island. I'm seeing everybody out to dinner. I'm saying, I thought everybody thought they were just going to die. We were going to get attacked, right?
Right.
And I tell you, people just wanted to live. They just wanted to enjoy. So that 2001, where I think there should have been a recession from 92 every 10 years, they say, we skipped right over that.
Right.
Skipped over it. And then we went into that 2007. That's why it was so big, because we didn't get a chance to pull back. So that's why this pullback is good, because it's not a real pullback. It's not a recession. We got slowed down on purpose. It's like God almost said, I want everybody to slow down, get humble, and redo their business, right? So again, so on the mortgage side, I know the hard money side, the private side. I've done hard money for 20 years. From when I used to do private money. Hey, Anthony, I used to do private money from just my own portfolio to now institutional buyers. Alpha Funding sells to institutions like a mortgage bank. And so we know a little bit about being a private lender, from when you borrowed money from your backyard guy that you met your neighbor, to now we sell them in big blocks of pools, and we service them for the hedge funds. And it's amazing how it transformed into a real business. Hey, Anthony.
Hey, Fred.
Well, I'm glad you're on the phone call, like I said, Fred, because you not only provide the insight in the bank, but you also do business at a way bigger market, because you're not just doing New York. You're doing New York, New Jersey,
right,
Florida. You're doing the whole East Coast. So you have data that we're not exposed to.
Yeah, listen, we're opening up in California pretty soon, and California is feeling kind of what we're feeling, but they're in better shape because they weren't in the middle of the pandemic. They weren't in Jersey and New York where we are. But it's funny, as much as they didn't really have any real problems with only 100,000 cases, but at the same token, they still felt the liquidity issue crunch. So I guess New York is the financial capital of the world, even though California has all the money.
Right.
25% of all mortgages originate out of the state of California.
Wow, that's crazy.
That's how big it is. But it all boils back to liquidity, I think. It just boils back to liquidity.
Well, Fred, don't drop
Ryan,
too much.
Anthony, how you doing?
Because we're gonna start in like 6 minutes. We're just doing like small talk right now. There's a lot of people that are still like chiming in.
Anthony, I love that painting. You never told me you were a professional painter.
I painted it myself.
Even weird enough, it matches his shirt. You know that.
Nick, I'm gonna have my staff post it through our social platforms again right now. You have a link that we could send out.
Yeah, I'm gonna send it to you right now.
Send it to me through Messenger.
Okay.
You want to tell Jamie to send out the invite one more time? I had a guy call me. I forgot his name. He was on your webinar tonight. And he said, Fred, you know me. What's going on? I'm going to be on the Nick Tang thing tonight. It's funny.
Yeah, did you get that guy, Fred? Did you reach out to him?
Huh?
He was asking for your contact info. Did you?
Oh, you spoke to the guy?
No, Matt and I. He emailed, said, send me Fred's information.
No, was that that was another guy, short sale guy?
Oh, that was another guy? Oh, okay.
Different guy. Yeah. Yeah. So.
Fred and Anthony, where are you guys watching from? You guys at home offices, at the home?
I'm at my home office. My home office.
Good, making sure everybody's quarantined right now. Just making sure.
No, we're not
Let me
quarantined.
tell you a quick story.
Yeah, please.
I played golf Saturday with my buddies, and we were all in separate carts. And my friend was complaining all day. He was sick. He was going to pass out. And he's got Crohn's disease.
Right.
My stomach. So by the 17th hole, I said to him, now I'm down $500. I said, "Ryan, you should go to the hospital right now. You said you're going to pass out. You don't look good." He really didn't. Okay. I was trying to say that because he forfeits the match, first of all. So we all go to the car with the carts. Like an idiot, I go and I started coughing because I felt bad. I got his cart and I put it back. So 2 hours later, I follow him and my other friend who drove him there because he didn't want to drive after that. He had COVID.
Wow.
So now I'm saying, son of a bitch, 2 months, 3 months, I've been good. All of a sudden, I go and touch this guy's keys. I touch the steering wheel of his car.
Yeah.
No, we got tricked by accident. He didn't trick us, but nobody thought of it.
Right.
So I stayed home Sunday, Monday, Tuesday. I went for the test today. The 2 sticks up my nose, and they took my blood for the antibody.
Yeah.
You know what? They were very uninterested in they said, listen, you ain't got any symptoms. Why would you take the test? I said, because I want to.
Yep. For my safety.
She said she hasn't seen a case in 30 days, the doctor. They were doing 400 people a day, the test. They haven't seen anybody who has tested positive in a month.
That's good.
That's interesting information.
Let's get to know everybody on the call. You want to get started with intros or whatever?
Yeah.
Or actually, do no formal announcements first.
Formal announcements. All right. Ladies and gentlemen, get ready. Take your breath. We are back. This is New York Real Estate Investors Association. Whether you're tuning in from YouTube, from Facebook, from the meetup page, or from your own backyard, I don't care. We got to start this off right. Ladies and gentlemen, if you're excited for tonight's event, we literally have over 100 viewers that are with us between all of our platforms. So this thing is already popping. I want you guys to use that comment section, okay? And in the comment section, let us know right now, where are you tuning in from? What town you're tuning in from? Brooklyn, if you're from Brooklyn, shout out Brooklyn, Bronx, Manhattan. If you're from Jersey City, baby, because that's where I am, all right? Put it in the comment section. Let's see those now, where people are tuning in from. There's like a slight lag. So I'm going to carry on to the next point, and then we'll come back to that. So first and foremost, my name is Elijah Barber. I have the opportunity to co-host today's event. We literally have 3 rock stars that are going to be on here with us.
4. I'm one of them.
I'm going to get to you in a second, okay? We have 3 rock stars plus an additional one who's over here. We do co-wholesaling. We do buy and holds. We do wholesaling. We do fix and flips, and primarily in the New Jersey markets. I'm really excited because the 3 guys that are here with us today are all local, and they do a tremendous amount of business in the New York market, so we get to dive in with them. But real quick, before we get into that, Nick Tang, you want to give us a quick little intro to who you are, my fine friend?
I founded the club just here to help people that are trying to get into real estate, get in, and for the people that are already in, make more money.
Simple enough, baby. I love it. All right, who we got? We got Cornell tuning in from Queens, Pat from Long Island, Trevor from Midtown. What's up, Midtown in the house? Brooklyn, New York City, Ann's from Bronx. Guys, I'm so excited that all of you guys are here with us today. So before I get into introducing and before we get to learn more kind of about our speakers today, I want to let you guys know a little bit about our club. So this is the New York Real Estate Investor Association. We are literally, you can Google this. Okay, this is facts. We are speaking facts today. We are the largest real estate meetup group in the entire country. Okay, this New York club is. And Nick's been doing this for a long time. I've had the blessings to be able to help him run these for the past few years. And it's just been an absolute extraordinary time to be able to connect with guys that are like this, like Brian, like Fred, like Anthony, who come on here, take time out of their day to let us know kind of what's going on in the markets. Okay. And so these guys are literally volunteering their time to really just kind of give back to the community. And guys, I'm really excited to have you guys here. So we have
the best guys.
Yeah, they are the best guys, best dressed, best energy, all the above, just straight up awesome people. Okay. But I want to let you guys know we are primarily a membership based club. So at the very end of this event, Nick's going to be sending everyone who was on tonight's call. We're going to be sending out an email or a message you're going to receive from us, and you're going to have a special opportunity to join our membership. What is this? Who's it for? What's it all about? We do these. You're going to get it on the email, so there'll be plenty of details there. But trust me, you guys are going to want to do it. It's super affordable, and it's a good time. And when we get the live events back, we'll be seeing you guys in person too, as well as online. So without any further ado, let's do a drum roll, please. If you're at home, get your drum roll going. Get your drum roll going. Up first, we have Brian Karp, #1 RE/MAX agent in New York. Literally what you were telling me earlier, you know, just how you kind of got started. And then literally just last year alone has sold over 200 units, okay, in New York, 200 properties in New York. Guys, I'm excited to learn from Brian. We also have Fred. Fred, I can already tell. I mean, you're a golfer, man. Like, you just got that energy, you know. You got that energy, okay? Fred is the CEO of Alpha Funding. He's a business guy. He's been structuring deals. It seems like his whole life. Fred, I'm excited to get to know you a lot more. I'm excited to dive in with you. And last but not least, the man, Anthony Altieri. Anthony, we've known each other for like 3 years. You were actually one of the first people that I've ever met that was in the hard money space. You were super vulnerable. You're super honest. You're super genuine. And you really do whatever it takes just to help people like myself, which was 3 years ago, a newbie investor, really get started. And me as an experienced investor, you know, you're such a value add to the community. And I'm really excited to have all you guys here today. Gentlemen, are you guys ready?
We're ready.
Let's do it.
All right. So let's kind of go ahead and get started. So we will start with Brian first. Okay. Brian, give us.
Then Anthony, then Fred. That's the flow.
All right. Brian, Anthony, and then Fred. Okay. Brian, give us a little introduction. Let us know who you are and let us know what you're all about.
Sure, absolutely. So I was the kid who, I wasn't the bad kid in school, but I was the kid who literally had zero interest in school. I would sit there in science class, just like I am today on this big high top table, and my knee would be bouncing up and down like this. Okay. The 45-minute science class literally felt like 4 hours. And today I wake up at 4 a.m., I go to bed at 10 p.m., and the day is gone in a flash. I can't even create enough hours. So it's so funny when you find your addiction, you find your passion, you find your purpose, how time doesn't even exist.
Right.
When I was in high school, I knew my father was a construction worker. So what he said to me is, listen, school's not for everyone. Learn a trade. You'll always be able to feed your family. So me being a good soldier, someone who just does and doesn't ask why, I went to a trade school, and I went to a trade school for electrical. And that was my plan. Graduate high school and go out to the workforce. And then my senior year in high school, I got offered a full scholarship to play football in college. So I was kind of at the crossroads. I was like, free education or football. And at that time, football was my addiction. Football was my passion. So I said, football. This is a no-brainer. I ended up going to Stony Brook University, had a great career. First year, they went Division I. And my senior year, I ended up becoming a two-time All-American. Wow. And my senior year, I ended up having my second knee surgery. And I realized I wasn't going to the NFL. Now it's 2005, top of the real estate market. And I'm like this, I should have listened to my dad. What am I going to do in my life? And a buddy of mine on the football team gave me this book that changed my life forever. Book was Rich Dad, Poor Dad. Book was by a guy named Robert Kiyosaki. And I'm not the book kind of guy, but this is the first book I ever read cover to cover. And after reading that book, I ran out in 2005, top of the market, and I bought a 2-family house. At that time, my beautiful wife today was living upstairs with me. We rented out the entire downstairs for $2,000, and my mortgage payment was $1,900 a month. I'm sitting there 20 years old and I'm making $100 a month. And I had the aha moment. I'm like, this is it. This is what I'm going to do in my life. I'm going to start buying rental houses. So 12 years ago, I got my real estate license for one reason, to be an inside player. I feel like the only way to understand real estate was have access. And I started this real estate business as a part-time job. My first year, I sold 3 houses, friends and family. Then I sold 10. Then I sold 20. And I've been selling about 100 houses a year for almost a decade straight. Last year in 2019, I sold 205 houses, just under 90 million worth of residential real estate. And I was the #1 real estate agent in all of Long Island. And every dollar we've been blessed with, I was telling you before, there's no fancy cars, there's no fancy watches, there's no vacations. Every dollar for the last 12 years, we've reinvested back into real estate. So today, me and my wife own a large rental portfolio. Because like I was saying to you before, we all have a gift. Making a little pile of money isn't difficult, but how do you turn that pile of money into a stream of income forever? That's how you build generational wealth and change your kids' lives.
Love it. Thank you so much, Brian. We're going to be diving in deeper with you here in a minute. Up next, Anthony, floor is yours, baby.
Sure. So my name's Anthony Altieri. I've been in the real estate space, specifically the commercial lending space, for about 30 years, 25, 30 years now. Right out of college, I worked on Wall Street for a few years. I saw an opportunity to go into a real estate lending space early in my career. Before hard money lending was what it is now. Everybody's a lender. There was only a couple of us back in New York in the mid 90s that did this. So I've been in this game for a long time. I've only worked for 2 or 3 companies, which is great because I don't like to move around a lot. But because of market crashes and things that happen in the economy, I was forced to move a couple of times. But again, in 25 years, only 3 lending companies I've worked for. Kind of says a lot about, what I like to do and my loyalty to the business and to companies that I work for. Most recently, I'm working with Fred Assini for a company called First Rehab Lending. And about a year ago, Fred had an opportunity to buy and merge with another large company called Alpha Funding Solutions. So First Rehab Lending and Alpha Funding Solutions, through Fred's doing, became Alpha Funding Partners. So now we had 2 large hard money lenders. I don't even like to call it that anymore. Bridge lending companies that merge together to become what we want to hopefully become the largest in the Northeast right now and in the country at some point.
Yeah.
So at Alpha Funding Partners, I'm the chief sales officer. I'm part of a team that manages all the sales and business development related matters for the company. I work directly with senior management. I work with the underwriters, and I deal with the customers on a day-to-day basis. That's what I like to do. I like working with customers. Customers can relate to me and vice versa. And like I said, the fact that I've been in this business for 25 years speaks volumes, and that resonates with my clientele. And I have actually a lot of clients that I've been working with for over 15 years in the business still today, because of the fact that I'm so passionate about what I do. Fred, who's going to speak soon, who's a veteran of the industry, was very gracious enough to bring me into First Rehab Lending about a year ago. And now with this merger with Alpha Funding, we're ready to basically take on the world.
Anthony, can you add I know you're like a killer at the lending side. You also do investing, correct?
Yeah, I mean, I've been investing since the 90s. I've done everything from fix and flips to new construction, buy and holds. I've had rental properties. So what that enables me to do is be on the other side of the equation. So when I'm speaking to an investor and he's telling me what he's doing, I've done it. So not only have I done it and I've been the client or the borrower, I'm now the loan originator or the underwriter on the other side of the table. So I kind of know what questions to ask and how to steer that person in the right direction, tell him whether it's a good deal or a bad deal, whether he should do this or that. I can refer him to any person in the industry, whether it's an appraiser, a contractor, an architect, a lawyer, a title person. So having been on the other side of the equation enables me to relate more to the borrowers, which is very helpful.
That's so important. I love that.
Awesome.
Great.
All right, Fred, give us the intro, baby. Come on.
Well, my name is Fred Assini. I'm the CEO of Alpha Funding. Anthony gave you a nice bio of Alpha Funding and where we're at today. I started back, if anybody, wants to know, back from my family's remodeling business. So I started out in the construction business where I would go to college, and from 3 o'clock to 8 o'clock at night, I'd have to come back and go out with the repairman to make sure my father got me involved and I had a job during college. So during that time, I would see like my brother-in-law and my cousins and everybody go out till late at night and give estimates for construction. And a lot of times we're dealing with these fix and flippers, and we're dealing with construction people. So I learned pretty much the industry, the real estate industry, from the construction side. But one thing that we did do is that we financed. So when we gave an estimate for 20,000, 30,000, Jersey City, anyway, we did all financing. So we would had pretty good numbers back then, $1 million, $2 million a month, just in, $30,000, $40,000, $50,000 siding window jobs. And my dad had the contract for Sears Roebuck. So we were smoking out probably then at 30, 40 million a year in home improvements, but it was all finance. So I understood the financing background when I walked into a home and seeing if I was going to either give them a home improvement loan, was I going to give them a second mortgage, we're going to refinance the house, or was I just going to put it on a credit card, or if their FICO score, back then there was no FICO scores, but if they didn't have good credit and I ran it before I went in the house, I say, just pay me cash. So I started from the construction back in the day when they had 203K. Everybody knows, I'm sure, Brian, you sell a lot of properties. 203K, I was the guy who went in and gave the estimates for the banks that needed the 203 contract. So one day somebody walked in my showroom, some woman, she'd say, hey, I'd like to get an estimate on my house. I said, okay. She says, how long you own the home? And I would qualify her on the sheet. And she would say, well, I don't own the home yet. I'm getting a 203K loan and I need a contract to give me an estimate. I said, well, if you don't own the home, I really, we were taught not to waste our time. She says, no, if you give me an estimate, the bank's going to give you the job. I said, really? That sounds pretty good. So I gave her an estimate. Who knows what it was, 50, 100 grand. Turns around, she goes, you got to start tomorrow. So, oh my God. I said, what bank did that? This is like early 90s. She said, oh, Parkway Mortgage. They were from Jersey back in the day. So I was very, very enamored by the mortgage business, and not only did we finance, we would give our mortgages out to brokers. And back in the old day, we would give it to brokers, but the brokers never made our customers happy. So I would do the home improvement. I would call it into a broker. He would go and refinance the house, and she'd say, never give me that guy again. Now, maybe they wouldn't give me my basement or my siding job because they didn't like the broker. So I ended up becoming a broker back then. And I did that for a bunch of years, and things would grow. I was doing 100 second mortgages back in the day, putting credit cards together and home improvement. So if someone came in and said, look, I have credit cards of 30,000 and your job is 30,000, I would put both together and say, I'm going to save you $800 a month and fix your house, and your house is going to be worth $50,000 more. So I started out from financing construction, and then eventually I got tired of construction. I always invested in real estate during those times. I did work for the real estate guys, and I would watch them in the Bronx buy the 3-family houses, and people who didn't think of having portfolios back then like that. So eventually I went completely into the mortgage business, became a bank, and I was in 42 states, and I was doing $2.8 billion a year. So that's my experience from the construction to the home improvement loans to doing financing. During the 90s and the early 2000s until late 2000s, I seen the trend in private money go from private money, which was hard money, which I had my own book back in the day, and I always did it and bought loan, until now, jumping to 2012, it started to become institutionalized. It got to be so big with the fix and flip and the buy and hold that now the hedge funds and the REITs, and not banks, were starting to add this product in on top of non-QM they were trying to get on. So what really interested me in 2012, I think when I started FRL from being a private lender, but then opened up a big company, I already had the mortgage bank, and I was getting all the referrals from my loan offices and people that I knew. It was kind of like a built-in model. And I started to meet a lot of hedge funds that I never did business with, and they were loving the product. And then we made up our own set of guidelines. We made up what we wanted them to purchase, and then we would do a partnership with them, and then we service the loan. So not only did I underwrite the loan and buy the loan, we would also service the payments for them, do the inspections and all the drawers. So that was the model. That model worked out very well from 2012 on as it grew. And then it added, I think, maybe in 16, 17, from going where you'd have to get a rental. Brian, I don't know how you financed your projects, but you'd probably qualify for a Fannie or Freddie rental loan. Rental loans came out on the private money side, which you don't have to give tax returns, and you could have a 6% rate instead of a 10% rate on a private money loan. So that started to build up. So my experience started all the way through from the 90s to now, which is almost 30 years. Oh my God. To seeing how the industry got to where it is today. So I'm very proud to have Alpha Funding partners. Anthony is awesome. You guys, Nick, we went to lunch last year, Nick, in my restaurant. So I was happy when Nick said, come on the panel. You have so much experience. And I said, Nick, you're so good at what you do with this group. You really provide awesome value to people. When I met you, I believed in you, right, Anthony? We went to lunch with Nick. And I think it's very important what you do. Guys, Brian, you're awesome. You're in Long Island. We got to get to lunch someday. What part of Long Island are you in?
I'm out in Suffolk County, right around Stony Brook.
Okay. I'm working out in Hop Hog now, my trainer. So
absolutely.
Thank you for inviting me to the panel. Hopefully I can give some good insight on the industry today. And Anthony could do the same. And it's a pleasure to be here.
I think you said something really interesting in your intro. You said that you did construction first,
Right.
Yeah.
right? Do you think that's actually like a valuable skill set to have before?
I think it's one of the most important skills to have. Right now, what we're buying throughout the change is the people with the experience versus the ones that want to get in. It's a very hard conversation when we get a couple of hundred phone calls a week from people thinking about, getting into the game now and looking at properties and what should I do when, obviously there's a slowdown just because I guess everything's on pause a little bit. Everybody's just optimistically cautious, which is good. But yeah, experience is very important because as private lenders, and Anthony could join in on this, there's usually, everybody makes money in the space. It depends on how much, right? A guy can make 60,000, 100,000, or 20,000, or nothing, right? But he never lost. Usually, I've never seen anybody really lose because we're like a consultant to people. When we look at the deal, you may not like everything what we have to say, but we're giving you the positives and we're giving you the negatives, and then we're looking at the what ifs. If this guy gets hit by a car tomorrow, God forbid, is this project going to be able to be finished and sell the house? That's all we really. We're not into loan to own business. So thank God we don't have a lot of that at all, and our customers have been great through this process also. We haven't seen, I think the first month, maybe only certain 5% were late, and then maybe just 10, and everybody's paying. It's really exciting to see that there is a slowdown, but we haven't seen our customers take a huge hit. We've been drawing money out left and right, Anthony? We're probably getting 30 to 40 draws a week.
Payoffs every day.
Yeah, payoffs. All the payoffs are coming in. My son owns a mortgage bank, and like I said, he's so busy, and we see our checks coming in, but selling properties. So guys like Brian, it's a phenomenal time because he's going to get people are looking to get out of New York City, get out of certain parts of the city, move to Jersey, move to New York, and buy a house. Go get the dog, go get the swimming pool, let's get out of the apartment. So within some kind of, I guess, some turmoil and hurt, which we're all, very sensitive to COVID. It's a little mind baffling what's going on to all of us, I think.
Yeah, we're going to get into all what's going on. Okay. But yeah, go ahead. Yeah.
So what's been happening, like I said, the payments have been coming in pretty well. And also the payoffs we see the
things are working. Things are like there's not like a standstill.
Nothing is. Lending is paused and changed a little bit, but the other side of selling the property. So we see guys getting leverage off the books, which is nice, and those guys are coming right back in. Okay, right. Because they just couldn't maybe buy deals during the process for a couple months, which I said everything is a little bit on pause, which I think that's okay. I think it's okay. Let's reevaluate.
I'm gonna jump to Brian. Brian, were you were you always gifted at first of all, what do you think is the secret to becoming a successful real estate investor? Is it the ability to sell?
So at a young age, I realized that I was never going to be a doctor. I was never going to be a lawyer. I was never going to be an engineer. So I realized if I was going to create massive wealth, if I was really going to live the life of my dreams, there was only one way: sales. That was the only way to do it. And then I started looking around and I said, okay, 90% of the first generational millionaires were made through real estate. So I said, why am I going to make my wealth in a different industry? Why don't I just make it in real estate sales? And that's kind of why I got into this. And this started off as a side hustle. We were doing 3-10 homes a year and said, oh, this is a great business. And the next thing you know, you wake up 12 years later, I'm an overnight success, doing over 200 transactions a year. But you got to remember that this is a hustle. I'm the nerd that's up at 4 a.m. watching the market. The nice thing I have, which and I'm an open book for your entire group, is that at any given time, I'm carrying 100 to 150 active listings. Right. So all across the board, from your entry level market price point all the way to your luxury homes to I have South Jamesport on the water, piece of sand for $700,000. I have Greenport on the water, condominium for $600,000, Oldfield for $1 million, all the way down to the 300 and 400 super entry level. So it's nice for me as any given day, I can look at what's going on at the back end and say, okay, wow, look at this sector. Like this area is slowing down. Wow, look at the velocity in this area. So we're able to advise our clients, our friends, our inner circles on really what's happening, because what everyone's reading in the newspaper, it's old news. Right. What's happening on my computer screen, we're boots on the ground.
Brian, like you're such so charismatic. Like, have you always been like that, or were you different when you were younger, or like you're so sociable? I appreciate
that. So I have a severe learning disability. So I'm dyslexic. And dyslexia is when you really can't read. So I see letters and words and numbers inverse. So as a young kid, I really had no choice. I couldn't get up in the middle of the classroom and just read when the teacher asked to read. I had to either memorize it or have a story or be able to verbalize it. So I almost feel like I had to overcompensate for everything that I had. You got to remember, I'm running a multi-million-dollar real estate company. But when I'm out to dinner with my 6 and 8-year-old, they're reading me the menu. I'm like, boys, what's for? I have my son Brody is 8 years old. My son Brock is 7. They might be watching, so everyone wave to them. Say hi, Brody and Brock. I'm gonna get a text message from my wife on the side of the screen that the boys are waving back. But they're the ones who have to read me the menu. And so I think that's one of the reasons I had to compensate for being able to speak better and being able to master the English language.
That's awesome. I mean, it worked out. Right?
Absolutely. Listen, I wake up every single morning. I'm the most blessed man in the world. I literally got a winning lotto ticket. And I feel like every single person who's involved in the real estate business, oh, look at that one. My kids are going to come running down here.
Oh, yeah. Let them come down.
But literally, every single, us 5 have this. Oh, my God, look at this. We're bringing the whole crew down.
That's great.
Every single one of us have a winning lotto ticket. I wake up every single morning like that. It's just how you're going to play it, how you're going to use it, how you're going to work it. So if it's on the hard money side, it's on the lending side, it's on the investment side, it's literally raining money out there. So you just have to know how to strategically put yourself in between it.
That's awesome. Elijah, take over.
All right. So we already covered with everyone kind of, so I want to dive into kind of what the past 2 months have been like. We're gonna dive in here in a little bit, kind of what we're seeing with changes and where things are going. But I first want to know, like, as soon as quarantine hit, we got the lockdown, right? Everyone stay inside. What happened with your business? What was going on? What were some of the moves that you guys were making literally 2 months ago?
All right, hold on. Before we answer that, I got one of my guys right here.
Okay.
All right, I'm gonna start having kids now. I gotta start having kids now.
Get girlfriend first.
Anyway, we're going to start off with Anthony. Okay. Anthony, if you can just kind of let us know whether it's in the buying space, and you can definitely speak on the hard money space. You and Fred can kind of, synergize here.
Sure.
What was business like 2 months ago? What happened? What did you see? And how did you guys adjust 2 months ago?
Okay. So when COVID first hit, it was like
yes.
Not that our business literally stopped, but it changed dramatically, like any other business. With us, though, with all the changes in the economy and the unemployment and the businesses closing down, construction crews not being able to work, labor not being out in the workforce. This all impacted us dramatically because we're lending money to the people that are working out there. They're buying, fixing, and selling, or buying, fixing, and holding. And there's so many people involved in the closing of one of these loans on a lateral basis that it's such a big impact. So we're talking about appraisers, contractors, title companies, lawyers, lenders, the people that work for all these companies, municipal buildings where records are recording documents. So it's just unfathomable that how many businesses were affected that directly affected our business. But we took a step back. You know, we have great ownership in our company, Fred, and he has other partners as well. Alpha's been around for a while. Fred's been around the block a couple of times. So they sat back. We've all been through market crashes. Maybe not everybody out there, but at least Fred, myself, some of the owners, I've been through two or three of them myself, you know, with 9/11, 2008, and now this. So we kind of we didn't panic. Everybody stepped back and said we need a game plan. A lot of lenders out there who weren't really lenders, they're just brokers. They went away. They went out of business.
Yep.
Alpha is a solid company. We have a strong foundation. We weren't going anywhere. We were going to continue to lend, and we wanted to get the message out there to our borrowers that we were still here. So draws kept going out. You know, we were on the phones every day. Our team was in place. You can get any one of us on the phone at any time, and that's all we could really do in the beginning. And then, you know. Okay, so then loans start to come in. People still want to invest because that's what they do for a living. So somebody that's a real estate investor, that's his job. He has to buy his next house because he needs to make money.
Yep.
So they're still coming to us for money. Okay, so then that brings up another point, which is
we also had to secure our servicing portfolio. You know, we had hundreds of millions of dollars that we had to protect.
Right. So we have to protect that and service it at the same time.
And we actually sent surveys out to all of our customers. We made sure everybody was good and they contacted us. And what were they going to need for help? And Alpha Funding really did. We all put our heads together and we send out questionnaires if they're going to need help or not. People really came to with just an honest way of, you know, no problem. But we didn't just want to say, hey, you can't pay us. We're not going to give you a construction draw, right?
Right.
For me, if you say, all right, don't pay me, just finish the house. That's all we really cared about. And we had a real good book of clients. So we locked down our servicing. That was probably took 30 to 45 days to really make sure our investors were really going to be good and we were going to be good. And we haven't stopped. I mean, we heard some real horror stories with one huge guy who there's a $17 million he didn't give out in draws. You know, divide that by 30,000 a draw. You're talking hundreds of people that didn't get their money to do the construction on their flip. So that's one thing we're proud of. I have to say we're proud of that. We bunkered down. We took care of all the customers. We're doing the draws. The construction money's going out, and we secured the servicing. And that was part of my end. That was my proud moment, I think.
Right.
We'll take a step back. So what Fred said, that was actually the first priority. It was the customers and the book of business. Keeping that intact and making sure everybody was okay. If you could make a payment, if you couldn't make a payment, whatever the answer was, we had a solution. And then going a little bit forward, after we kind of figured all that out, then it was the sales side of it, which is originating new loans and have revenue coming into the business, into the company. And we were still lending money. Unfortunately, the box that we were able to lend to kind of got a little bit smaller. You needed a little bit more liquidity. You needed maybe a little bit better of a credit score. You needed more experience. We weren't lending to first-time investors anymore. We weren't lending 90% of the purchase price and 100%. We were lending 80 or 85. So all those things in the box got a little bit different. And then we got the message out. That was the important thing. We were on webinars. We were sending email blasts. We were talking to people. We were getting the message out. We're still lending. You still need to do your business, which is fixing and flipping houses, and we're here for you. So we lent them on a different level, maybe 5% or 10% cut across the board as far as LTV or LTC, whatever it may be, but we were still lending. And we still are. We're making loans every day. Like Fred said earlier, we're getting payoffs every day. And more importantly, we're servicing our clients who are ultimately going to be and have been repeat borrowers. So we want to get the message out to everybody that Alpha's here. Like I said, we have a strong foundation, and we're going to continue to lend. I'm sure another question what you were going to ask is the difference between 3 months ago and today, and I'll answer that at a separate time, but there has been a lot of changes for the better. So I'll get to that on the next question. I know Fred might want to add to what I said.
Actually, I want to ask this for Anthony and also Fred, and then we're going to get into Brian. In terms of like investing, did you put a stop for investing? Because I know, Anthony, you invest in fix and flip, buy and hold. I know, Fred, you do pretty much everything. So like, how has that been
On the investing side or on the lending side?
the investing side? Because
No, for me, I went to the stock market more. I see, for me, I've been an investor for years, and I probably did 150 renovations in the last 5 years. I see now great opportunities for Brian and everyone to look at deals. And the issue is they're out there, but everyone thinks they're just going to get a great deal when you're lucky if you can get a deal, right, Brian? You don't have the inventory and the short sales, and it's just not like the way it was. But if I'm a real estate investor and I look at deals, I want to look at deals. You know, I'm getting emails from Florida, guys, that's 22-unit apartment building in Jacksonville. You know, he's buying it for 1.2. No, he's buying it for $950. It's worth 1.2, and he's dying to fix this thing and get it out there. It's a great deal. I would say to a gentleman like that, well, you know what? As the owner of the company, maybe I'll do that deal with you because you really don't have the liquidity to do it yourself, or we may not trust him to do a 22-unit renovation. So that's where some of that goes. That the people that want to get into it now may not have the qualifications or liquidity, but the opportunity now is better than it was last year because you should get better deals if you're scrappy.
Right.
So I see it as a good time, very good time. Especially there's homeowners out there. Like I said, my son's company is people buying. They're closing on loans. They're busy. They're refinancing homes. So just you got to have the experience and the liquidity now. So which is good.
So I'm gonna just identify some gold nuggets you pointed out. One is, so if you're working with if you're a conventional mortgage rep, you're killing it right now because people are doing a lot of refis.
Killing it.
And then
And purchases, right?
Purchases got slow they stopped, but now everybody realized people like what we're doing. They're doing webinars, they're doing virtual. Brian, you could tell them how your business probably has changed. Of not really, maybe it paused, because everyone just got scared and no one knows what was going on. But at the same token, now there's a backlog of people that were looking or want to buy that want to kind of hurry up, and hopefully there's a house available for them. This liquidity issue in the market, it definitely put a stop to like new construction type of financing. And you got all the big builders in Manhattan with these huge high rises that getting haircuts because of liquidity, because all of a sudden they got a building worth $1 billion, and that was the estimate of the after appraised value. And now the bank says, we think it's going to be worth about 800 million. Could you write us a check for 200 million? And everybody looks at themselves and say, well, where are we going to get that from? So it's a liquidity problem on the lot larger of a scale with the big boys. So that's something that's a separate type of issue, but it all boils back to liquidity.
Right.
Back to liquidity.
I'm going to identify.
Yeah, you go ahead.
I'm going to identify my gold nugget that I got actually from Anthony, because Anthony was talking about this communication, but much more in detail is like taking care of the customer, right? And so if you're a wholesaler out there and you're generating leads to sellers, the sellers are your customers, okay? Or the buyers that are trying to put offers in with you, they are your customers. And so I'm on their email list. I literally was getting emails from them, the surveys. They were doing like Alpha Funding was doing everything that they can to really like look out and watch over their borrowers' backs, and not even just their borrowers, but their potential new clients. And I can tell you, like, the people who do that during these downtimes, they're the ones who separate themselves when things get better. Why? Because they were there during the downtime. And so for us as investors, like a huge gold nugget for me is like, even if you're scared to reach out to that customer, do it anyway. And just see how they're doing and see what ways you can add value. So, Anthony, thank you for sharing that.
Absolutely.
I think we have not went over 48 hours to release a construction draw check to anyone. It's in our policy originally, and we kept to that policy.
Right. Well, I'm going to identify another thing Fred said that was really good. Fred said, you're looking at you had a person that sent you a deal to get a loan. and they don't necessarily qualify, but you're willing to partner with them. That's
Some of these deals that they're coming across are unbelievable deals. I see them out there. And these are the people that are on boots on the ground. Unfortunately, I'm not boots on the ground anymore like I used to be. I used to travel every borough myself until 10 o'clock at night with my little home improvement bag.
Right.
So when I see these deals, I'm like, this is phenomenal. Oh my God, this is great. So, we have a department that we're going to be going back into, maybe doing deals with people together that maybe help them out and we become partners with them. And then we'll put a construction manager on the site.
yeah. Once you figure out,
Just a little bit over their skis, in the fix and flip space, there's never a problem with the buy and the sell. It's usually a mistake on construction, right? I mean, we're all in the industry, right? Anthony, it's usually someone who, I don't know, someone calls up and says, well, my contractor quit. Get me off, it doesn't really, but they got to get restarted again. So the business is all about the experience with the construction, because we're watching the purchase price. We're watching the after appraised values. We're watching the market for them.
All that analysis is done up front. So if it goes the way it's supposed to go, usually nothing goes wrong. It's like
Anthony and Matt are the ones who steer people in the right direction to make sure they're making the right decision, because we'll tell people, this may not be the deal for you. Go get another deal. Doesn't mean we're not going to give you money. Just may not be the right one for you.
Right.
that's awesome. I think we got what we wanted to know, or we want Fred and Anthony to share. Let's go to Brian. Brian, how is things with you in the first 2 months?
So let's fast forward, or let's rewind a little bit and go back to when this all just came about. Very similar to Alpha, the way that I run my business is we are in front of everything and over communicate, and that I think is one of the reasons we were able to walk all of our clients through this. So I'm carrying over 100 active listings. Maybe 30, 40 of them are in contract, which basically means, for people who don't know, it means we've already obtained a buyer. And now that buyer is going for financing, traditional financing, non-traditional financing. And during the whole situation, out of the over 100 properties that we sell in any given time, we did have 12 deals fall apart due to financing. And some of them were A-plus buyers. I had a client, he owned 4 barbershops, paying himself on paper $300,000 a year. And next thing you know, they're not lending to him. So we were playing damage control from the beginning. So as soon as we saw that this was going to, right around March 13th, which is my birthday, when I got back the next Monday on the 14th, me and my wife looked at each other, me and my business partner looked at each other and said, all right, this is for real. So we got on the phone, we just started talking to all of our clients. We're already over communicate, but with COVID, we stepped it up to the next level, just keeping everyone up to date with what's going on in the real estate market, where I see it's going. And the good news, out of those dozen transactions that fell apart, every single one of them are back in contract with new buyers.
Right.
So for me, that's what's really exciting. And I did, for a second or two, think that this market that we had, which is a blessing because we had a good run, Fred, I'm sure you'll say, for the last few years, of just a positive market, where even if I sit with someone, I'm like, listen, guys, this is a $700,000 house. We put it on for $750 and they're getting $740. So we had a great run. I did really believe it was going to pull back. It hasn't yet. And I'll tell you guys why it hasn't yet, for a few reasons. Reason number one, we had low inventory prior to COVID. Okay. So inventory was already low. Then the last 2 months, the amount of homes that I was putting on was a lot less. We were doing listing appointments via Zoom, and I was putting a few up, but the amount was down substantially. So over the last 60 days, a lot more inventory did not go onto the market. On top of that, we had a lot of people in the 5 boroughs who said, what am I doing here? Let me come out to Long Island paradise. Let me get that half acre. Let me get that 3,500 square foot house, the in-ground pool. So it was like the perfect storm with all of that. So even though at times I'm like, we're going to get to 25% unemployment, I'm like, we're heading into a recession, I'm saying to myself. But what ended up happening is, even if we lose 20% of the buyers, there's still another 80% of the buyer pool that is still out there. And as long as the inventory stays low, everything's going to be fine. So I truly believe that the rest of 2020, we're going to run with this market. So if you have projects in the hopper, get them fixed, get them on the market. And I'm super positive about the time that we have left in the 2020 calendar year.
You know what? This is our second live stream that we did on this topic, and yesterday's response was very similar. Like it was scary. The theme was that it was scary within the first 2 weeks, but then as time went by, the data showed otherwise. It showed that the prices were going higher than asking. Versus you have to accept the low offers now.
Right. What I can tell you is in 19 we would look at the numbers, we would put it on, we would have 20 people and 14 offers. In 20 we would still put on the same number, we would have a little bit less showings and 2 or 3 offers. So we're seeing it start to slow down slightly, but as long as the inventory stays low, everything's going to be fine. And it's so funny because during that 2-week period where everyone was running, because a lot of the hard money lenders, obviously not Alpha, were like, we're not loaning anymore. We're not loaning anymore. The amount of deals that came across my desk from wholesalers or the novice fix and flipper trying to like get out of the deal. And I kept hearing in my head, Warren Buffett, be greedy when others are fearful and be fearful when others are greedy. And I'm like, oh my God, look at these. I'm seeing deals. And I'll always cherry pick the right buy and hold. And I'm like, keep going. I'm waiting for the best one. So it's so funny to see that. And now we're out of it. And, everyone's right back to where we came from.
Yeah.
Brian, so you as an agent, right? It sounds like you have more of a focus in Long Island area. Yes.
That's it. That's my hood.
That's your hood, baby. Why do you think it is that the majority of people are coming from the 5 boroughs and going into Long Island versus like other markets and, maybe relative to Jersey, even more up north? What do you think makes Long Island so special?
Yeah, it's funny because when I look at the algorithm and I look through the end of the year and I see, okay, 200 plus transactions, and I dive into it, 30% of those people left Long Island. And they weren't just the 65, 70-year-olds retiring. Like a lot of it was our generation, the 20s, the 35s. And like, Brian, husband's a firefighter, wife's a teacher. We're making $200,000 a year. We're just getting by. Like we're getting off Dodge. But it just gets replaced with everyone coming out from the boroughs. Yeah. I think, listen, home ownership is the American dream. It's never gonna go away. I'm a big fan of some of the other big time real estate developers and speakers, and they're saying people are gonna become renters forever. Like your God-given right is to own real estate, and that's how I was brought up. Now I'm teaching my kids that our God-given right isn't just to own real estate; it's actually to own multiple houses, and people rent them from us. So I just think that it's burned in the American way that home ownership is. And I see a ton of people coming out from the boroughs. Besides, not to go on a rant, but what's happening is they're selling the 2 families, the 3 families for ridiculous amounts of money. Yeah. And the whole household is coming out to Long Island and they're buying a house here, and they're just putting their roots down. There's nothing like the backyard. It's not like the pool.
It's free money, 2.5% to 3%. You're borrowing money. It's free.
Yeah. You can thank the president. You can thank everyone who dropped all this helicopter money into the market. Yeah. Every single person got the PPP. So all of us running huge payrolls like you guys, we all got the money right in. Like I've never seen anything like this. Plus all of the there was one other loan that we got. We didn't even take it, but at nothing interest rates.
Right.
It's incredible. It's free money right now. So the government's doing a great job by buying mortgage-backed securities, keeping the market there, keeping the 10-year low, bring it down. There's going to be, I think, I forgot how many Americans. It's going to be like the biggest refi boom for the next 2 years that we've ever seen. And when they keep saying it's over, and they said the millennials didn't want to buy houses and they were going to rent and live in Farmingdale and take Uber. No, they're buying houses through right online. So they were wrong. Home ownership is everyone's dream.
Yeah. Right. Well, and unfortunately, COVID did happen. But on the flip side of that, there's going to be a mass exodus out of major cities. And Brian, you are going to reap the benefits of that, my friend.
Brian is in a jewel of a county, Suffolk County. Suffolk County has been hot. It's been on fire. The new construction's been going great. It's just we've been doing a ton of money out there because the taxes are better than Nassau County. So you get somebody that goes to Dix Hills, and I'm building 3 houses in Dix Hills. They just want to live there, and they don't mind that my nephew just bought a house in Smithtown. My niece just bought one in Dix Hills.
Yep.
My one works for Google. My nephew's a lawyer in Manhattan. I said, "You're really going to take a train after living in Long Island City?" He says, "Absolutely, Uncle Junior. My wife's parents live out here. I'm going to have a baby, I'll take a train ride for an hour and a half." He didn't care.
And you know what's going to happen, Fred? What's happening?
$1 million in Manhattan.
Yeah, and people now learn that they can work from home.
Exactly. That's what it is. I think that's only going to make the suburbs go up in value because now people can work from home, which is great. Now you can come a little bit further out east and get your acre, get your half acre.
Yeah.
Let's team up, Brian.
Absolutely.
Absolutely.
Yeah, I think no one really understands how valuable having a backyard is until they actually can't go to the park.
Yeah.
That's the benefit of living in the city. It's going to the park, going to the restaurants, but when you can't go to either of those things.
My dream was to buy an apartment in the city. I would never go to the city now.
I lived there for 15 years. I don't even want to drive in anymore.
Yes. I don't even want to drive through it. Okay.
So I have one more question for Brian. So Brian, what kind of marketing were you doing prior to COVID? And then how are you seeing kind of marketing? Did you stop any of the marketing? Did you double down on any of the marketing? Like what was the lead generation process like for you over the past few months?
Sure. Absolutely. Really good question. So we changed up our marketing a little bit different. We're always super, super techie and high def pictures, but we really started diving deep into the video. So I have a full-time videographer who works for me, who videos a lot of my everyday life. So we always have content to put out there. But what we basically did is we strapped him up. We got him one of the 3D cameras, and he started rolling through all of our listings. And we put together these super high-end 3D. And basically, we could send you a link, and you could literally walk through the house. And in a few years, you're going to have goggles that your real estate agent's going to give you that's going to allow you to walk through the house. But it's not like a picture. Like you could look up, and you would see the ceiling. You could look to the side, you could see the outlet covers. And that actually helped us continue to move product even during the shutdown. Because today, I've been up since 3:30 this morning because today was the first day real estate was back opened. So we were able to show houses. Now I had to have a face covering on. So I had my, if you check me out on Instagram at Brian Carpel I had a bandana on. Gotta have the plug. I had the bandana on, and I was looked like the Wild West. But today was I had a line of people who were ready to go through these houses. And prior to that, we were just doing videos of the houses. But
did the videos?
I'm sorry.
Did the videos work? How was that process? Certain
price points they worked. Certain entry level houses they worked because these buyers were so desperate to see. I wonder if I could share the screen with you guys. I want to show you guys something. Let me see.
I have no idea how to do that with this.
All right, well, me either. But we had a house in Babylon, which is price point of the house was $450,000. I put the house on 48 hours ago, and we've already had 40 appointments come through the house. The homeowner is literally like this. They can't even handle it anymore because there was so much pent up activity, and these are all first-time home buyers.
Unbelievable. That's great.
Virtual showings, or was it
these? As of today, everything is real deal back in the house.
Okay.
So in Long Island, phase 2 just opened up. I was on News 12. They interviewed me a few days ago to kind of get the temperature of what's going on. But remember, we lost 60 days of buying time.
Right.
So I think that this summer market's going to run even a little bit longer this year, and it's
long.
All price points. I have $1 million in Stony Brook. They're doing the home inspection tomorrow. Buyers came from the city.
Excellent. Good news. Good news.
All right. Let's review some gold nuggets here. First and foremost, if you guys aren't following Brian on Instagram, there's nothing better than seeing a bald man on video. Let me tell you. Gold nugget for me. I think it's interesting to recognize trends and kind of what's happening in the market. And Brian's literally telling us what he's experiencing right now in regards to the suburb community. And that was primarily due to the fact of the changes that are taking place, such as we can work from home, right? People with families will start to understand the value of having the backyard and all the amenities to really kind of be a homeowner. So that was one of the big kind of gold nuggets that I received during that session.
I think the other one is virtual tours. They work, but for the right price point. So it's not just any price point. but there's a price point where they do really work. And so if you're not doing that, you could be missing out.
Also, something I want to drop that I saw prior to COVID, and I'm starting to see it even more now. For all the investors out there, if you could buy the houses with apartments in them, it's a home run. Regardless if the road is busy, regardless if the location is terrible, the apartments in the houses, the buyers from the city love, and the young buyer loves because they can have a little extra income when things aren't always as positive. And I've seen over the last few years, the high ranch with the downstairs apartment or the split with the apartment in the back, these were getting even higher than we normally would typically compared to another house. So there's a little something to give the community.
I mean, would you compare that to like a 2 or 3 family, or are these like?
No, so out in Suffolk, really 90% of the houses are all single family homes.
Okay.
The 2 families are 5%, and like the 3 and 5 families, they don't even exist. Like those things, when they come out of the market, people are slicing each other's throats over them. I'm just talking about the single family home with the accessory apartment or room for mom. Like those, the values of those I can't even keep on the shelves because there's so many buyers who, remember, things are getting expensive, so they're moving mom in with them, or Aunt Sally is coming to move in with them, or they want a little extra rental income. So if you guys could pick up those high ranches or other houses that are conducive to having the accessory apartment, and just depending on if Alpha lends this way, but maybe not have the stove on the side, like those, we can't even keep them on the shelves.
It's amazing.
So, and just another thing to add, I know one of the topics of this webinar was how to kill it in the second half of 2020. And I think
which we're going to get into
a little bit earlier.
No, I think we're good to get into now.
Let's get into it now. Anthony, take it
that
away.
is aligning yourself with the right people. And a capital partner like Alpha Funding, who has been there through this and been customer oriented and customer service related, is a right type of person or company to align yourself with. I'm sorry, I didn't mean to jump the gun.
You're killing it.
I've been wanting to say that, how do you make money in the second half of 2020 after this disaster? Aligning yourself with the right people, the right companies, a capital partner like Alpha Funding and a direct lender who all they care about is their customers and making their customers money. That's how you're going to kill it in the second half of 2020. So our box has it got a little smaller in the beginning of COVID. It's gotten a lot bigger. My phone is ringing off the hook every day. Deals are coming in. We're getting so busy. It's starting to turn around. Hopefully, the COVID thing is, we're going in the right direction. I know there's a lot of speculation as to what's going to happen in the fall and in the winter, but for right now, we're going full force. We're lending every day, and that's how we're going to make money in the second half.
I definitely couldn't agree more. So Anthony, let's kind of touch base a little bit in regards to this topic. So a lot of investors on here, maybe they want to get into buy and holds, maybe they have a small portfolio. Right. Because I know you own quite a bit of units as well. What are you kind of seeing, or what kind of should we be expecting when it comes to, buy and hold opportunities, and what challenges do you see coming up in the future in the buy and hold space? Well,
the challenges are not so much in the future. The challenges are going to go away in the future. Right now, the challenges are that type of lending, that DSCR, as it's called, rental programs, those kind of went away for a little bit because of what happened with COVID. They're coming back. They're coming back quick. We're back on track with that right now. So I don't see any challenges with the rental programs. I think it's advantageous for borrowers to go into the buy and hold now. Buy and hold is going to be the trend going forward. If you own properties, the renters are going to be lining up. I mean, Brian can attest to this also. People want to live in suburbs and not so much in the cities anymore. So not that there's going to be a mass exodus. That may be the wrong terminology, but there is going to be an exodus from cities, and we live in the biggest city in the world, in the world, New York City. So people are going to be buying in New Jersey, Long Island, Westchester, all areas that we lend in, and Brian specializes in one of them. But the buy and hold thing is going to take off like no other.
Yeah,
So
my recommendation.
we're
Sorry.
going to bring that product to our clients as well. In addition to the fix and flip product, the buy and hold product is coming back. So those loans where people buy something, fix it, and then go into a long-term loan, that's going to be the trend going forward, and we're going to be available for that for our clients.
Right. But just remember, if you're a real estate investor or speculator, that you got to have a bank, like Anthony said, align yourself with the bank that's in your right pocket that you know you can lend. But just always expect now, different than it was before, to make sure you have the liquidity when they ask you for a little bit more down, or they say the guideline, and you're going to say, well, I bought 20 houses in the last 4 years. Well, the guidelines have changed. So when you're going looking and you're working hard and you're grinding it out now, like we do, we're working every day. We haven't missed a day at work. If you're an investor, just make sure the bank that you dealt with before, you can call over to Alpha Funding anytime, and we'll tell you exactly what you're going to need to get into a deal. No surprises. I can't tell you how many calls we get every day where guys just aren't closing and people are going to lose their deposits. So just be ready and have know the end game, because basically you're going to buy something for $400,000 and you got to put $80,000 down. You got to know what else you need, right?
Right.
So I want to point out something I heard from Anthony, and that is that means that what's going to be hot soon is really multifamilies, right? And so if you got a multifamily and you're looking to sell, it's almost like it's gonna have a higher demand sooner.
Multifamily were getting hot pre-COVID, to be honest with you, Nick.
Right.
Jersey market. I mean, look at like Bergen County, New Jersey, or I know this was a New York webinar, but anyway, you can't, like in Lodi or a town like that, you two families, or you can't get one. If you can get your hands on a 2 or 3 family in the suburbs of Bergen County, which is basically called the 6th district of New York, it's gold. So 2 and 3 families going forward are going to be even more in demand. And that's why I don't see any the values of those not going down post-COVID. They're going to go up.
Even in Newark, a friend of mine's daughter from Brooklyn was buying something in Newark, a 2-3 family. Said it was on the market for 2 days.
Yep.
2 days.
Right. So the rental market is going to do phenomenal. And the demand for the 2 and 3 and 4 families, 1 to 4 family houses, as we call it, the 2, 3s and 4s, they're going to go very quickly. And if you, as an investor, if you can get your hands on a multifamily, a 2, 3, or 4, you got to grab it. And that's what we lend on, and that's where we're competitive. And we're going to give the best pricing and the best leverage on those deals.
Great real life example on North Babylon. I just put a legal 2-family, and one of the best ones because it had 2 separate dwellings, so the tenants don't fight with each other, because all us landlords know when they're on top of each other, it's like cats and dogs. But when I comped it out, literally it was the 380 property all day long, because one just down the block traded about 6 months prior. We put it on for $399 because the real estate marketing machine I built, if I run it through within 30 days, I should have activity. I should have offers. I run it through the marketing machine. We're in contract today for almost $50,000 above asking.
Exactly.
Wow.
And we're able to get the buyer to waive their appraisal clause, which means I had so much leverage because I had so many offers that he had to waive his appraisal clause. And for our listeners who don't know what that is, basically what he's saying is that even if the appraisal comes in short, well, he's going to make up the difference in cash to make sure the deal goes through.
Yeah. And then just to add to that,
and that's
not a lot of 2, 3s, and 4 families out there, which is going to lead to a lot of new construction for these multifamily houses. And Alpha, we're going to be right back where we were a few months ago, lending on these projects where you're either building or buying these multifamily houses.
What is your guys' take on 2021, Alpha?
Real future stuff here, baby.
Well, listen, everything I'm doing is 3 to 5 years out. We're not playing checkers. We're playing chess.
Yeah, you're right. I think, I haven't given too much theory yet for 221. I think we're still going to be in good shape. I think everything reaches a peak, like the stock market, like the last 2 days. I don't think the real estate market's going anywhere. People have to live. It all depends on the economy with jobs. People have jobs to buy in houses, right? We have loans 3% down to 20% down. So I just think that, real estate can only go so high, like San Francisco, and eventually it levels out. People are going to get sick and tired of overpaying, or they can't afford it, right? Or the numbers just don't make sense. At a certain point, if someone's looking at a 3-family, the numbers just don't make sense. okay, where the guy said, I'm going to get a rent and you know what, I'm going to live upstairs, but it's still going to cost me $3,000. I'm out. So it levels off, but it's never going to not go anywhere. It's not.
And Brian, not that I'm an economist, but history repeats itself.
Yep.
And I've been doing this for 20, 30 years. Every 10 years, this kind of happens.
Well, we're on a 12. That's why a guy like me who's carrying a large piece of inventory, we're 12 years. We're 12 years on a run.
20 to 30 is going to be another real estate boom, to be honest with you. I think that's going to happen. I mean, the COVID thing is obviously putting a damper on things. And once the vaccine comes out, that things will change. And that may be 6 months or a year away. But I think the next 10 years we're going to see economic growth, not only in other markets, but especially in the real estate market. That's what happens historically, it without fail. And coming out of this recession, which is we're in, that's what's going to happen. We're going to see the same thing that happened after 2008.
There you go, Brian. Anthony gave you 10 years versus 2. All right.
I love it. Listen, guys, who've been in the game for a long time, I always like to get their nuggets, as you boys say.
Absolutely. Thank you for that question, Brian. So Anthony spoke about the trend with especially multifamily housing and the buy and hold business. Anthony, you yourself, do you see yourself buying properties, over the next few years, especially multifamily?
Absolutely. Rental properties and multifamilies are going to be the first thing that I'm going to be targeting. Those properties, like I said, because of where we live geographically, if we live somewhere else, I may not say this, but because of where we live, there's going to be a drastic movement out of New York City, out of the boroughs into the suburbs. And where I live in Bergen County, New Jersey. If you can get a multifamily, a 2, a 3, or 4 family, or even bigger property in where I live or anywhere within 50 miles, I think, of Manhattan, I think that's the next trend, and I think that's gold.
I love that. Thank you, Anthony. All right, so we're going to go to Brian, and we're going to finish with Fred. Guys, if you guys have questions, get ready to post them in the comment section. We're going to be bringing up your questions live at the very end, so get ready for your questions. So Brian, killer real estate agent, you've been providing so much value today. What's kind of your take on what direction we're going in the market? And you as an agent, what are you doing to, really kind of get that market to dominate the markets over these next, 6 months, year and a half?
Yeah, good question. So what we're doing is I don't have amnesia. The problem out there is that, everyone got really scared when this whole COVID thing ran out. It's because they just assumed that the market was going to keep running. So I think if there's any takeaway from this, it's that the investors have to be a little bit more conservative. They have to have a little bit more cash on the side. You can't just keep putting your chips all in every single time. So that's my big takeaway from this. Even though I did live the last recession and the last real estate meltdown, I always kept on my back shoulder, like, this is not always going to run like this. So there's a lot of real estate agents out there that when this stuff happened and the market got shut down, they're not getting commission checks. They're not able to pay their bills. They're not able to feed their family. So I'm always been a big preacher to, do your best to have a reserve fund. But even more than ever, that's what takes away the risk from anything that you're doing in the real estate field, is if you have money to back up from it. So that's my big takeaway from this. I feel like it kind of brings everyone back to reality, which they needed a reality check. We don't run our lives, and we're not a steward of money like that, like some people are. But I think a lot of people need to check and take a deep breath back and make sure they have proper reserves. And I'm sure Alpha could even attest to that they love dealing with people who have a few million in the bank but don't want to use it and rather come to you guys.
Always want to use other people's money, right, Brian?
Absolutely, all day long, every day and Sunday. Every day and Sunday. And I guess for any of the real estate agents out there, it's just, listen, this is a great opportunity. When everyone pulls back, like, you got to move forward. So as soon as COVID hit, we're getting up a little bit earlier. We're hitting the gym a little bit harder. We're getting our mindset, our health, our fitness, everything. We're just stepping our game up. Listen, this year we may make a little bit less. We may sell a few less houses because of what happened, but we're going to work our asses off to continue to dominate our markets. And that's what I'm doing as a real estate agent.
I love it. Brian, what do you think is one of your kind of go-to marketing strategies, especially in the markets to come?
Yeah, so I'm an old school salesman. So when we get a new listing, listen, you're going to get us. We're going to run it through our social platforms, and we're killing it. We're killing it with retarget marketing. You know, literally what we're able to do is old school marketing was market to anyone who wants to buy a house. Now, all we have to do is, okay, come up with who's the avatar. And what do I mean by that is, okay, we look at the price point. We look at the demographics. So look, here's an example. We're putting something up right in Setauket. Setauket is blocks away from Stony Brook University, Stony Brook Hospital. So what we do is we run killer video ads in LinkedIn to anyone who works at Stony Brook University. And now, depending on the price point, if we're looking at homes that are $800, $900, $1 million, which would kind of be the higher end of this area, then we're going to target to the more affluent people working at that university. But that could be done anywhere, down from the IRS building in Hoaxville to the Ronkonkoma train station to Farmingdale. You just have to know who your avatar is. So we're really crushing it with that. And then old school salesman like me is I'm getting on the phone. I'm getting on the phone with the agents and the buyers, and we're building a buzz and excitement.
So for you, Brian, one of the hottest ways to generate, or not even generate leads, but to kind of narrow in on that avatar, that ideal client, and how to find them and how to connect with them to get to generate that call is actually through LinkedIn. You guys are using LinkedIn, yeah?
We're crushing it with LinkedIn. Everyone pulled back on LinkedIn, 3 years ago when all the other social platforms jumped up. But LinkedIn we're getting great response from LinkedIn because we could really target that one demographic that we're looking for, who we know what their jobs are. You know, when you're paying for the ads with LinkedIn, we know where the jobs are. But listen, we're loving Instagram. We're loving Facebook with the geo-targeting is awesome because we literally could hold an open house and geo-target everyone who's in that 1 mile radius for those 2 hours. And we could have crazy videos, crazy pictures going through their feeds. So marketing has totally flipped the script from what it was.
Would you agree that it's like it's more a marketing business than
Absolutely. I'm a marketer. I really am. I'm running a marketing company, and that's really what it is. And that's why listen, a lot of people on this call are not in my hood. So I'm not even selling myself. I'm selling you to make sure when you hire your real estate agent, you're looking for a top advisor. That's what I am. I'm a top advisor, and they have to know how to market your house properly. Anyone can throw you up on MLS. Anyone could put you on Zillow. Anyone could put their hands together and pray that it sells. But the real agents that are doing volume business, 50, 100 homes a year, those are the guys and women that are really out there marketing your property and spending money. And that's where the value add is. The value add isn't in the real estate agent who could put you up on MLS, because you guys could pay for that for a few $100. So I'm the biggest proponent that I bring a value to build the buzz and excitement about the house. And that's really what I do. And I always say to my investors, because a lot of the investors, they're like, oh, I'm just going to sell it on my own. I'm like, that's great. Listen, I have a lawnmower in my shed, but I don't mow my own lawn. It's not a good use of my time. I can go on YouTube and Google how to do brain surgery, but I am sure not cutting my skull open to do it. So hire the expert. I hire the expert for everything. I am the guru. I am the oracle in real estate and selling houses, nothing else.
Right. That's awesome. And that's why you're number one. That's why. You understand that. Mm-hmm. All right, we're going to go into questions. Are you ready?
No, we got to go to Fred real quick.
Okay, yeah, sorry.
I got to get some more insight from Fred, baby.
Yeah. I got a hard stop in about 2 minutes. So okay. I just want to thank the other guys on here. I got another minute or so. Fred, Anthony, awesome. We definitely got to try to connect, guys. And
we will.
Elijah, Nick, thank you so much for having me on here, guys.
Give us your contact, for how people can contact you.
Sure. So great way to find me is on Instagram, Brian Karp LI. You could find me on YouTube, Brian Karp LI. I have a YouTube channel. Website is soldbybrian.com. It's super easy. Or just put Brian Karp Realtor into Google, and your boy is going to pop up. You'll check out my 2 cars that are wrapped. Like, we don't fool around with this. If you jump online right now, check me out. You'll see I got a car wrapped. I got a truck wrapped. We're all in on this. My driveway, I only have 2 cars to choose from, either the wrapped car or the wrapped truck when we're going out. So we're all in on this. And if your real estate broker isn't all in on it, then you better find someone else.
I love it.
Awesome. Thank you so much,
Brian.
Thank you so much. All right.
All right, Brian. Thank you. All right. So Fred, I'm deeply fascinated by just, your energy and all the insight that you have. You being in the lending space, buying for literally the past X amount of years and getting started in the construction space alone. What do you see, kind of happening over the next, 6 months to a year? And us as investors, whether we're brand new or maybe we do have a little bit of experience, like how would you kind of recommend that we best prepare ourselves to really get in a place to dominate and really make change in our life? Can't hear you.
Oh, Fred, you muted yourself.
So, sometimes I'm very bullish and I want to dominate. And sometimes I do take a little bit of a look at my life and what I have. I think at certain times, there are times to push and there are certain times to just take a ride. So right now, I think it's time to find your best deals. But if you're leveraged right now and you have, too many deals out there and you're having a tough time with the deals selling because you're not finished and you're coming across 3 or 4 new ones, you may not have to you can't do that deal right now, or you may borrow too much money, or you may have to go into your 401k, or you may have to bring on partners. So I think it's all, it's a logical controlled growth. Everybody's great at what they do here. You guys, Brian was excellent. Anthony's has so much experience. I think right now right now is the time to go in. It's just exciting. There's a silver lining in this. I hate to say this, the COVID thing. There's a lot of people that I know in certain businesses see that once it's going to open up now, it's just going to be better than it was before. But then again, there are certain people that have liquidity issues, right? And there are banks, like Brian said, that he had some customers that couldn't get that loan, when they could before. So I think there is a change. You just have to look. Like Brian said, what I do, I come home every night. Okay. I actually now work out with a trainer in his basement Monday, Wednesday, Friday, but I read every night. I exercise 3 nights a week. I'm at my business every day. We haven't missed. I think I missed 1 day in the last 3 months. You have to be sharp. You have to say, if I want to get it, and I want to grab it in 2020, 21, you got to be better than you were before, because there's someone else that wants it right now. There's someone else that's going to get it. So business has changed. It's coming back. How do you afford the opportunities you had before? Anthony said it well. You have to have the right partners, the right contractors, the right banks, the right realtors like Brian. You need the right team around you. So as an investor like yourself, who are smart guys, you have to look at more deals that maybe I had before. I do believe in one thing that and again, I buy real estate. I'm not the guy who's going to buy the multifamily for 50 grand more than someone else, right? That's just not me. But there are people that do it. So like I said, at some point, the market's going to level off like it did in San Francisco. You just can't every year have a 400% rise in value. Right now, we don't have a commercial person in this space, but commercial properties right now have an issue. The liquidity markets, the government bonds, there's a lot of issues going on. So a lot of what we did tonight was great, and it's awesome for what we all do. But we don't know how we're going to come out of this and do the banks, everything go back to normal. If not, either going to have to raise some more capital to get into deals or bring some partners on. Anthony is very big into when people call every day and they say, how do I get into this deal? He'll say, look, go get yourself a real estate partner, go get yourself the contractor, put them on the loan, okay? Bring them in as a partner, give them a piece of the equity of the deal, because together you're better off than separate. So if you want to get into deals, Anthony's very good at structuring the loan to get the deal done. You said something, I think, earlier when you met Anthony years ago. He helped you get into speculating, correct? Mm-hmm. And that was nice to hear. And you were new at it. Yep. One thing that we prided ourselves at Alpha Funding before and at FRL is that there's so many people that we grew up lending money to when they had no experience, and now they have 3, 4, 5, 6, 10 deals under them. Those are the customers that we're lending to again. Obviously, it's the people that are coming in new, like Brian talked about his avatar. We have an avatar, and we're doing a lot more now with marketing than we were before, because we do need a certain clientele that, we don't want somebody who calls us up and says, look, I got 10 houses right now and I lent 4 from that guy, I got 3 from that guy, and I got another 3 from that guy. Okay. And that's 10 deals and he didn't pay any of them off, but now he wants to finance with us because they won't give him money. So we do have an avatar of someone that's done a few deals. They have experience. They have a little bit of money, decent credit score. We have the money. We're lending. We'll do it to you in 2 days. We do see people that are getting into the market, right, Andy? I think most of the calls that we're getting, a lot of them are new people that are saying, I got to jump into the real estate market, right? I think that's the big. So
It's actually reassuring.
our avatar now would be to bring all the customers that got disappointed from their lender on the servicing, on the loan payments, on the draws, said no to him, did something, didn't answer the phone, not, brokers. They should call Alpha Funding. They should call Alpha Funding. I actually spoke to a woman from a meetup group today. She was, I don't know where, she was asking me questions, and she said, what do you get? What do you want to get? What's your mission to come into our meetup group? I said, oh, I'm from Alpha Funding, and we're one of the largest private money lenders. We just want to get out there a little bit more now on social media, and maybe get some new clients that have some experience. She goes, Alpha Funding. She goes, I got 3 loans with you. I swear to God. Swear to God. I said, really? I said, who do you deal with? She goes, well, I deal with Michael. And I said, Michael's wonderful. He's wonderful. She goes, you are really, really, really good. She says, your company has been great to me. All right. I have to, actually, I'd love to get her to write a letter. I couldn't believe what she said. She said, you're wonderful. Michael is wonderful. The company is wonderful. She goes, I'm excited for you to be in the meetup. That's nice to hear. I think right now, again, you come back to basics right now. We're all back to humbleness, right? We're all humbled. We were closing, 80, 100 loans a month. We're down like everybody else. I think getting humbled now is we put our business back together, okay, in a different way, okay? Get back to the customers and help them achieve what they want to achieve, but don't let them do too much.
Right.
Again, liquidity is the cash is king. So some people, sometimes have to learn to take some of your profits. Take some of your profits. Don't always just roll them over, because there will be a rainy day sometime in your life. Everybody has rainy days, right? So when you have that rainy day, said I had some extra money laying to the side. I had to put extra money into a deal. The floors fell apart. The house, something happened. Back in the old days, 2000, I had a friend that bought about 15 rentals. And if I tell you, he had to sell everything because at the end of the day, his liquidity wasn't there, and he couldn't carry the payments because he didn't get the rents. I mean, there are those stories.
Right.
So let's actually go into questions, and the question is very similar to what you just said. We were talking about how cash flow properties are going to be in high demand now, right? With that said, should an investor buy a small property versus a big? Because I would think a lot more people are going to be competing in the smaller space, the smaller unit count space, versus the bigger unit count space. What are your thoughts on that? What will be, I guess, more cost?
I think everybody has their size deal that they could get into. Like even, I get calls all day long. Hey, I got a building. It's $15 million. I said, well, listen, that's a little, that's out of my league. I just had a friend who used to work for me 20 years ago in the mortgage business, and he bought a building and he pitched it to me about 3 years ago. It was near not Roosevelt Field. It was by Nassau Coliseum. He bought a commercial building. It was $5 million and $1 million fixed. And I said to him, I said, buddy, listen, I think this may be a little bit too much for you. No real story. He just called me, wants to show it to me. He's so proud he finished it. He's into it for $17 million. I said, what happened to 5 and 1?
All right.
And he just, he thinks it's worth 28 million. It was worth 12. 5-1, it was 12. Now he says it's 28 million. I'm going to Bridgehampton National Bank. They're going to give me $17 million loan. So at the end of the day, you're going to break even on the value. He's not getting a loan for 28 million at 30 LTV, 70 LTV. He's going to probably have a couple of million of cash stuck into, which is fine. You should have money into your deal. You'll probably get like a $12 million loan on a $17 million value. And you know what? It's going to throw off $40 million a month. But I said to him as a friend, and I hate to do this to some people because I have a negative way sometimes. I said, so for 3 years you did this? He goes, yeah. He goes, I lost years of my life on it. It's all going to work out for him, but it's not that easy. So again, everybody has their size, what they can handle. Me, I like small deals. I can make money tomorrow, write a check, do a house, fix it, sell it, rent it. I enjoy it. I enjoy it. My dad taught me from the construction business. We always did what he called quick silver. I did siding, I did windows, I did roofing. I was in and I was out. I didn't get stuck on an extension for 6 months with the people screaming that they can't use their kitchen in the house, right? So there is something said about the smaller deals to make quick money.
Sure.
3 to 6 months, flip a house. I love that business. It's in my blood. Again, like I said, I think everybody has their level. Like Anthony, you're probably comfortable in a certain size deal. Nick, you're probably comfortable in a certain size deal. Like when that guy called me from Florida, it was a 950 buy at a 1.2 value. He said 22 units sounds great, right?
Yeah, it does.
Well, Nick, I think a simple answer to your question was, or to that person's question was, it really depends on two things: your liquidity and your experience. If you don't have experience buying a multifamily building, don't buy a 20-unit building, buy a 2 or a 3-unit building.
Right.
And if you have $100,000 in your pocket, that
And-
says
And the only way to get out of the mistake is having liquidity, right? The only way to get out of the mistake is having liquidity.
right. Right. So liquidity and experience is the answer to that question, to be honest with you.
Thank you. Let's go to the next question.
Can we pin them up or no?
Yeah, I'll pin it up.
Boom.
You read it.
All right, Anthony. Oh, so this is Anthony and Fred. Rental property cash out refi. Several months ago, I saw rates in the 4s. Now they seem to be in the 7s. Is this true? Any feedback on that?
Go ahead, Anthony. You answer that.
Rental property cash out refi. So those properties that we were lending on, they weren't in the 4s. Conventional were in the 4s. Yes. The non-QM products that we offered, which was a DSCR program, which was a debt service coverage ratio. Those rental programs, those were in the 5s and 6s. They may have escalated into the 7s. I don't think so. But I can tell you this: they're not in the 4s right now.
Right. But if you qualify for a full doc loan on a in the 3s right now.
Yeah, absolutely. Full doc. That's the differential. If you go full doc, which is tax returns, income verification, absolutely, you're in the 4s.
Great deal. Great
QM product, you're in the 6 or 7s.
Richard, you learn anything? Share the post. All right. You like the answer. All right. Let's go next question.
Next up.
Question is what's your I don't know if we should answer this question.
No, we should not answer this question.
Okay.
This is a private message question.
All right.
Next question. We love you, Doug, but next question.
Okay, yeah, you can read it. Sorry.
What are the new minimum loan amounts post-COVID? So talk to me about the lending guidelines today.
Yeah, our minimum loan amount now is $100,000. Our lending guidelines are pretty simple. We're lending at a max 80% of the purchase price, 100% of the rehab. We always give 100% of the rehab. Our credit score minimum is now a 650, and you have to have a couple deals under your belt. So pre-COVID, you didn't have to have any experience. That may come back, but right now you have to show that you've done 2 deals by verifying them by a HUD. And the liquidity, you have to have 20% of the project cost. So if you're buying something for $300 and it costs $100 to fix it, that's a $400,000 project cost. You can assume, safe to say, you need a $80,000 plus for that project. You need $100,000 for that project cost.
Okay. Next question.
Thanks, Anthony.
Sure.
Thank you, Anthony. What are some tips for people just starting out? Things you would change, or better yet, how do you get a partner, or how do you get a loan if you're just starting out?
Well, I think if you're just starting out, and I don't know what Trevor's strength is. Sometimes some people bring to the table finding deals. Some people are the contractor on deals. Everybody has some people finance the deals, just put money into deals. So the tip to get started out is to, again, make sure you build your group, build your army, get your contractors, go partners with a contractor, go partners with a real estate agent, get your feet wet with somebody so all the responsibility doesn't come onto you. Everybody has a different lifestyle. Some people have to work a regular job, and I've seen friends years ago that used to work for me in the mortgage business, and they'd be fixing houses on the weekend. I'd say to you, you make $300,000 as a loan officer, but now because you're not working on the weekends, going to people's houses, you're going to make less as a loan officer, but you're going to make money on the real estate. You really didn't get anywhere. You're doing too many different things.
Right.
So I would bring partners in. It's good to get your feet wet and have people have responsibilities.
So definitely understand your strengths and then know what you might be missing and bring that on.
Yes. Like I have people say, look, I'm a decorator. I A guy told me once, he goes, I know how to fix the house. I know how it should look in that area. In that area, people love stone and they love the little copper roof. You know, some people know how to, if you look at a market doing a flip and you say, how am I going to make my house better than the ones that are for sale right now? Most people, flippers, don't even do that. They go look at the house, they say, looks like a good value. But then they look at what their competition is that didn't sell yet. What is it up against? It's not just a price, it's value. People do look at value. We look at value. We look at what you're putting in. Are you putting stainless steel appliances in, or you're not? Are you putting the big hardwood, the tile floors that look like wood? You know, are you putting tray ceilings in? Are you giving people more of a value? You know, I can't tell you how many deals that I did over the years that if we didn't build the renovation, not new house, the renovation, better than the ones on the block, you're not going to sell right away, and you're not going to be the first one. So you have to have a strategy. You know, I can't tell you how much reading I did over the last 3 months. Strategy is everything when you look at that. It's not just about, I'm going to buy you for this, fix it for this, and sell for this. It's really about, what am I up against? Because there could be a guy down the block, okay, who's got a beautiful house for less than yours because he produced it cheaper.
Right.
Right? So.
All right, let's go next question.
It's great feedback. All right,
Yeah.
from the one and only Dan Huey. What's up, Dan from New York? Which markets around New York City does Alpha expect New York City folks to migrate to? Are you guys seeing a trend in Bergen County, Hudson County? Are you guys also seeing a trend in Long Island?
All the above.
All the above.
If you're in a 50-mile radius of Manhattan, that's where we see the migration happening. Bergen County has always been known as the sixth borough of Manhattan, of New York City. So that absolutely. Hudson County literally is on the water overlooking Manhattan. Absolutely. Long Island, of course. I mean, you heard from the panelists.
Brian's area is special. It's just the taxes are low, and no one ever expected to Suffolk County to be on a boom.
Right.
But
Westchester, even like places like Yonkers or
Yonkers. Oh my God, Yonkers! You got to see the history. You got to see the history of houses in Yonkers, and you got to see the big three families, monster homes, Victorian homes. Oh, they're beautiful. Yonkers is special. It's just a great.
Yeah, like I said, even a little further out, you know, Bergen and Hudson County, they border Manhattan, and you know, Nassau County, Suffolk County, that's Long Island. You have Westchester, but you know, I would say, I mean, Fred, I don't know if you would agree. I think 50-mile radius of New York City.
Listen, it all depends on somebody's price point. The further you go, you know, the
further out you go, the cheaper it is.
It's like my nephew. You know, he stayed around where he grew up and where his family is. So people do migrate to the same areas, you know, and like Brian said, though, that he had people that moved out of New York because they can't afford it. There is someone that just replaces it. You know, I live in Florida also. It's not cheap. I don't know what people are thinking about going down there, but it's not, cost me more than up here because you're going down there. And I don't believe in Florida at certain points, only because you don't want to work. Up here, we're stuck working all winter, right? We're trapped. That's why we make more money than Florida, because we're working the other 6 months and they're on a boat.
Right.
Another thing that has been true since I've been in this business since the 90s. There's a direct train route to New York City. You live in a town that has that train, and you live near that train station. That's a valuable piece of property.
Yep.
I love it.
All right, next question.
This will be last question. It's 8:36. Two more questions.
We'll do one more.
All right, final two questions. T. Brown. What are credit score requirements now and points? That's slightly been covered.
Now, for the funding is a 650 minimum credit score. Our points, the origination fee depends on the deal. It starts at 2 points. It could be between 2 and 3% of the loan amount, which is 2 or 3 points. But again, that all depends on the credit score, the LTV, LTC. But yeah, 650 minimum credit score. Points range between 2 and 3.
And the rates start at 9.9. So
right.
a lot of lenders went up to 12, 11, and 10. I see a lot of ads. So we were very adamant about keeping the rates fair.
Right. We're not trying to take advantage of this situation and charge. A lot of lenders are now, we can charge more because of the situation. We're not trying to take advantage of any situation. If anything, we're being sympathetic at what's happened. Our rates
that is though the cost of capital is more. So what we did at Alpha Funding is we ate it. We didn't charge more. We just made less.
Yeah.
So we feel that we can get all the customers to migrate to us instead of chasing them away.
All right, last question. Ready?
Let's see it. Make it a good one. Ooh, Sophie. Hey, Sophie. All right. So for rental buy and holds, do you require income? When do you think we can get back to 20% down and 5% for buy and hold? No income needed like pre-COVID. Do you ever think it's going to get back to that, first and foremost?
Fred, me or you?
I don't see it yet because there is a pullback in the market, even though the appraisals aren't coming in yet low. We haven't seen a real appraisal issue. That's a liquidity issue. That 30-year no income check was it was like 2005. That was a securitization product. So that's gone. The securitization. I know guys that had $300-400 million on a line of credit and they couldn't get their securitizations done. It was frozen, completely frozen. So it's more of a liquidity issue. And that if that product does come back, it will. That's going to come back last with those leverage points because we have to start seeing movement again in the market, and we have to start seeing. And most people don't track the securitization market. So I think there are a few of them were just done. Some guys, I guess one company got to dump about $250 million. One of our investors, someone bought the securitization. So I think Redwood did one. I think 2 other companies. I think 3 were done. I got to check. Only 3 were done in 3 months, and they just happened. So
Right.
now what that was somebody was holding all these multi-millions of dollars of properties that were on their books, and finally they put it into the market. So they dumped them, which is good. Now hopefully we're going to see that start to come again. Not with those leverages. Definitely not with those leverages. I think that's going to take a year. And Anthony, what do you think on that?
Well, just to kind of to break down, she asked, I think, 3 separate questions. For rental buy and hold, do you require income? So just to answer that question, buy and hold means you're going to buy the property and you don't plan on selling it. We can give you the acquisition money to buy a property, and then you have 12 months to refinance if you're going to keep that property. So we'll lend you the money to buy that property. If you don't want to lose the deal and you want to really grab that property, we'll give you the money to buy it, and we'll lend you up to 80% of the purchase price. It's not going to be a long-term loan. It's going to be a short-term loan, but you will have 12 months to roll that into a permanent loan, and there's no prepayment penalty on our loan. So whenever you do that, that's fine with us. So that's the first part of the question. When do you think we can get back to 20% down and 5% for buy and hold? I don't recall 5% down for buy and hold, Fred. Correct me if I'm wrong, but 20% down, that's what we're doing right now. So we could give you an acquisition loan to buy a property as long as we're at the right LTV. We'll give you 20% down to buy a property that you plan on keeping.
Right. I agree. I do agree.
I think it was 5% for the rate.
Oh, 5%. Oh, those. I mean, the 5% rates are. That product is available out there. It's not an alpha product.
About 7% now, legitimately with the no income check.
Yeah.
Yeah, that's going to come down a little bit, but it's not there yet. They're not securitizing that paper yet, so that's not back. New construction hasn't come back yet either. So if someone wants to go buy a lot for $200,000, put a $200,000 house up, that hasn't come back easily yet. So again, that will come back. Especially like in Brian's area, you buy a lot for 200, put a house up 200, it's worth 600. Those were easy deals. Those are going to come back. I think new construction comes back before the 30-year. Like I said, the 30-year rental, again, it's a little complicated. I'm not an economist, but I am in the Wall Street side of the trading. I trade mortgage-backed security paper. That's a 30-year product. Even savings and loan institutions don't like 30-year paper. That's why most small savings and loan banks do a 10 or a 15 or a 20-year commercial loan. It's a shorter term paper. A 30-year note goes over to a securitization.
And anybody out there, if we didn't get to your question, I'm just going to throw this out there. AA, my initials, AA@alphafunding.com. Just shoot me an email. I'll get right back to you.
Right.
Customer service at its finest, baby.
Yeah,
Absolutely.
yep, that is true. Anthony's been grinding it out the whole way.
Yes.
We haven't missed a day. I have to tell you, we are proud of that. We don't get no pats on the back, but we're proud to be here. We thank you guys for having us. You guys are awesome hosts, unbelievable. I enjoyed this tremendously.
Awesome guest, of course.
Tremendously. It's nice how you guys knew each other. And Nick, we went to lunch last year. We'll get out there again. My restaurant's opening up in Farmingdale. I think we're doing outside. We're doing the patio this weekend.
What's the name of the restaurant?
Main Street Pizza Company.
Pizza, come on, baby.
Nick had a good time.
The pizza is just the beginning. The Italian food is fantastic.
Yeah. Then we're opening the restaurant next door soon. And it's called Main Street Social. Our slogan is we're going to get social again.
Hey, it's a good one. That's a good one.
Elijah, Nick, thank you guys.
One
Thank
second. Don't leave me yet, Nick. Anything final?
No, we're good. We're good.
All right, ladies or you guys, final motivation, final note, one final word from each of you, and best place to get a hold of you, email alphafunding.com. Let us know.
AA@alphafunding.com. And the last thing I want to say, and I said it before, I don't mean to repeat myself. If you're looking to make money in the next 6 months or the next 6 years, align yourself with the right people, the right company. Alpha Funding and FRL, between the two of them, they've had over 100 years of experience. Myself, 25, Fred, 30, other people in our company. We have probably 200 years of experience in this business. Align yourself with the right people that are customer service oriented, and you will do well in this business.
I'm always available. Call me anytime. Anybody needs any advice. Right now, we got time to give advice to people to make the right decisions. And that's why these webinars, you guys, these are great. We get to go out to hundreds of people, okay, to see the advice we can only give them to keep going and move on and be successful. And that's what it's about. We want everybody to be successful. Everybody.
Absolutely.
Good to see that. I'm a team player.
I love it. You heard it live from Fred. These webinars are great. So listen, if you guys learn one piece of information, you got some sort of value, please do us a favor. We do these free at no cost to you guys. Please hit the share button. Share it with your friends, your family, your dogs, your cats, your lizards. Share it with everyone. Okay, we appreciate it. We will be back to you guys within the next few weeks, and Nick will be sending you guys more information about our membership. Gentlemen, I appreciate the energy. I appreciate the information. And to all you viewers, thank you and have a good night.
Thank you, guys. Everybody, thank you. Thank you, everyone.
Thank you.